Welcome to this presentation about SoFi Technologies, a relatively young company that is transforming the financial sector. SoFi, which stands for Social Finance, is a fintech company focused on providing financial services to young professionals through a digital platform. The company started by offering loans but now also provides various other products such as bank accounts, investment opportunities, and mortgages. SoFi aims for a modern and accessible approach to managing finances. In this presentation, we will delve deeper into SoFi's activities, the technology the company uses, its competitors, and potential growth opportunities. We will also look at the company's financial performance and the valuation of its stock. The goal of this presentation is to give investors an overview of SoFi's strengths and weaknesses. Please note, this video is not intended as financial advice but is purely informational and educational. If you find this video interesting, don't forget to subscribe to our YouTube channel and like this video. SoFi stock can be found on the Nasdaq, with the ticker SoFi. The company's headquarters are located in San Francisco, California, in the United States. SoFi was founded in 2011 by Mike Cagney, Dan Macklin, James Finnegan, and Ian Brady. Currently, Anthony Noto is the CEO, and Chris Lapointe is the CFO. Anthony Noto has had a long career in the financial world, with positions at Goldman Sachs and the National Football League, NFL. He also has significant experience in the tech world, having served as Chief Operating Officer at Twitter. He brings a unique combination of experience in both fields. Noto has a strong vision for the future of SoFi and directs the company's strategy. Under his leadership, SoFi has experienced rapid growth, particularly in the range of financial products offered. He has strengthened the focus on technology and innovation at SoFi and is a key driver behind the transformation of SoFi into a one-stop shop for financial services. Noto's vision is to make financial services more accessible to a broad audience. He believes in the power of technology to improve the financial sector and has a strong focus on customer needs. Noto is known for his ambitious approach and quick decision-making. He communicates transparently with both staff and investors and has a reputation as a decisive leader who can act quickly in complex situations. However, Noto has also faced criticism for diluting the stock through acquisitions. He is not afraid to take risks, which means that not all projects will be successful. Additionally, there has been criticism of high costs under his leadership. During his time at the National Football League as CFO, Anthony Noto was known for his direct approach and his involvement in the sport. During team meetings and strategic discussions, Noto would sometimes use football field metaphors to make his points clear, which motivated the team. In summary, Anthony Noto is an experienced leader with a strong background in both the financial and tech worlds. His vision and approach are crucial to SoFi's strategy and growth, and his unique personality, with its competitive approach, is certainly something to watch as an investor. What exactly does SoFi Technologies do, and how do its activities contribute to the company's total revenue? The largest source of income for SoFi is its lending division. This includes providing loans for students, personal loans, and mortgages. These loans account for approximately 70 to 75% of SoFi's total revenue, with personal loans contributing a significant portion of the income. In addition, SoFi has a technology platform called Galileo, which also generates a portion of the company's revenue. Galileo offers technology services to other financial companies, including payment systems, banking software, and digital tools. The revenue contribution from this technology platform is about 10 to 15% of SoFi's total revenue. This is a growing activity that forms the basis for the company's further growth. Lastly, SoFi offers various financial services through its digital platform. These activities include providing bank accounts, investment opportunities, and other financial services. The revenue contribution from these financial services is also around 10 to 15% of SoFi's total revenue, with a focus on generating income through subscriptions. In summary, SoFi generates the majority of its revenue through lending, but its technology platform and financial services also significantly contribute to the total revenue. SoFi is not just a lending company but has a broad range of activities, making it less dependent on a single activity. Let's now look at what makes SoFi Technologies unique and how the company stands out in the competitive fintech market. SoFi has several strong competitive advantages that give it a unique position. First, there is the all-in-one financial platform. SoFi offers a wide range of financial products and services, from loans to bank accounts and investment opportunities. All of this is available under one roof through a user-friendly mobile app and website. It is a one-stop shop for all financial services, which distinguishes it from many other fintech companies. Secondly, SoFi primarily targets young ambitious professionals. The company uses data and analytics to offer personalized products and services tailored to this specific audience. SoFi is a technology-driven company. It uses advanced technology to deliver efficient and user-friendly financial services. This technological approach allows for rapid growth and scaling. SoFi also offers its own technology platform, called Galileo, to other companies. SoFi has built a strong brand experience. The company has a strong community of users connected to the brand. It presents itself as modern, innovative, and reliable. SoFi aims for seamless integration of financial services, providing users with an easy and intuitive experience. The platform is designed with a focus on user-friendliness and intuitiveness. Lastly, SoFi is a data-driven company. It continuously uses data to improve its products and services, adapting them to customer needs. Users receive personalized offers based on their financial profile. In summary, SoFi distinguishes itself through an all-in-one platform, a focus on young professionals, a technology-driven approach, a strong brand experience, the integration of services, and a focus on data analysis. These aspects give SoFi a unique position in the fintech sector. It is a company that is modernizing the financial world, with a focus on the customer and technology. Let's now look at the future of SoFi and where the growth opportunities lie for the company. Is there still potential in the stock? And what could SoFi look like in the future? The answer is that there is still a lot of potential. First, there is the possibility for SoFi to become a dominant player in the financial world for young professionals. SoFi can grow into a comprehensive financial ecosystem, with a seamless transition between different financial products and services. The offerings are becoming increasingly personalized, with offers and advice based on each customer's unique financial situation. Secondly, SoFi's AI technology will play an increasingly important role in the company. The AI technology will help customers with their financial decisions, from budgeting to investing, and from saving to borrowing. SoFi will increasingly use automation to make financial processes more efficient and faster. With predictive analytics, the AI systems can make the best choices for the customers. Thirdly, SoFi will expand its activities to other countries and continents. The company will adapt its products and services to the specific needs of different markets and will increasingly focus on international expansion. In terms of technology, SoFi will continue to innovate. In the future, blockchain technology will be used to offer secure and transparent financial transactions. Virtual reality and augmented reality will also be used to better serve customers. SoFi aims to make the financial world more accessible to everyone, regardless of their background or financial situation. The company strives for financial inclusion and wants to give customers control over their own finances. Due to these developments, SoFi will be able to achieve significant revenue and high profitability in the future. The potential for growth is certainly present at SoFi, and there is still a lot of potential in the stock. The company is ready for a future where technology and innovation will play an increasingly important role in the financial world. Who are the customers of SoFi Technologies, and how do these customers contribute to the company's revenue? SoFi has a diverse customer base, but the main customers fall into three different groups. First, there is the largest customer group, the borrowers. These are individual customers who use SoFi's loans, for example, for their studies, personal goals, or mortgages. This group of borrowers accounts for approximately 70 to 75% of SoFi's total revenue. These are mainly young professionals who take out loans through SoFi's platform. Secondly, there is the customer group that uses SoFi's technology platform, such as Galileo. These customers are financial institutions and other companies that use SoFi's platform. They account for approximately 10 to 15% of the total revenue. These are other companies that use the payment system, banking software, and other digital tools offered by SoFi through the Galileo platform. Lastly, there is the customer group that uses SoFi's financial services. These are private customers who use SoFi's bank accounts, investment opportunities, and other financial services through the digital platform. This group of customers accounts for approximately 10 to 15% of SoFi's total revenue. These are private users of SoFi's digital platform. In summary, SoFi's customer base is diverse, but the largest portion of the income still comes from borrowers. Additionally, SoFi is increasingly becoming a player in offering a technology platform and financial services. It is a company with a diverse customer base, but the focus is on young professionals looking for a modern and efficient way to manage their finances. It is important to know who SoFi competes with in the financial market and where the competition comes from. First, there is competition from traditional banks. Major banks such as JPMorgan Chase, Bank of America, Wells Fargo, and Citigroup offer a wide range of financial products, from loans to savings accounts and investment opportunities. These banks are significant players with a substantial market share in the financial sector, making them important competitors. However, traditional banks are often less technologically advanced than SoFi. Next, there is competition from online lenders like LendingClub, which focuses primarily on personal loans. LendingClub is a smaller player with a focus on the online lending market. Upstart is another online lender, focusing on AI-driven loans. Upstart is also a smaller player in the online lending market. There is also competition from other fintech platforms. Chime offers a mobile bank account with no monthly fees and has a growing market share among the younger generation. Robinhood is a major player in the investment opportunities sector with its mobile investment platform. NerdWallet is a platform that provides comparison options for financial products and has a significant market share in financial comparisons. Lastly, there is competition from technology platforms. Fiserv and Jack Henry are both major players in the fintech infrastructure market, offering technology solutions to financial institutions. These companies are important players in the financial technology sector. In summary, SoFi operates in a competitive market with various players in different segments. The competition comes from traditional banks, online lenders, other fintech platforms, and technology platforms. It is crucial to keep an eye on market developments if you want to invest in SoFi. Let's now look at the financial performance of SoFi Technologies, focusing on the trends in revenue and operating income from 2019 to the most recent TTM, trailing 12 months. These figures provide an overview of the company's growth and profitability over a longer period. Starting from 2019, we see a clear upward trend in SoFi's revenue. In 2019, the company had a revenue of $442.66 million, and up to the most recent TTM, the revenue has significantly increased to $2.519 billion. This trend indicates a growing demand for SoFi's products and services, showing that the company is experiencing healthy growth. In addition to revenue, we also observe an interesting trend in operating income. In 2019, there was an operating loss of $237.46 million. In the following years, the operating income showed a negative trend, with a loss of $328.52 million in 2020, a loss of $453.84 million in 2021, and a loss of $299.4 million in 2022. In 2023, we see that SoFi managed to turn the loss into a small operating income of -$53.84 million. Finally, in the most recent TTM, we see a positive operating income of $224.72 million. This trend shows that SoFi is becoming more efficient in its operations and is on the path to profitability. The positive trend in revenue and the improvement in operating income are important factors to consider when evaluating this stock. The figures indicate that the demand for SoFi's products and services is growing, and the company is increasingly able to convert revenue into operating profit. It is important to keep an eye on the most recent financial reports and further analyze the trend of profitability. However, the figures clearly show that the company is experiencing a significant upward trend. Let's now look at the stock price of SoFi Technologies and how the company is valued. The stock price of SoFi has shown an interesting development over the past few years. After a period of strong increases, the stock has also experienced periods of consolidation and corrections. This is normal for a relatively young company operating in the rapidly changing fintech sector. Currently, SoFi is valued with a P/E ratio of approximately 81. The P/E ratio, also known as the price-to-earnings ratio, indicates how much investors are willing to pay for each dollar of profit the company makes. A P/E ratio of 81 is relatively high, indicating that the market has high expectations for SoFi's future growth and profitability. This high valuation is due to several factors. Firstly, investors see significant growth potential in SoFi due to its strong focus on young professionals and innovation. The company has an interesting digital platform and a wide range of financial products, which are becoming increasingly popular with a young audience. Additionally, investors see that SoFi is on its way to becoming a profitable company, with investments from recent years starting to pay off. Revenue is growing, and operating profit is improving. Lastly, SoFi has an ambitious leader in CEO Anthony Noto, who is seen as a key driver behind the company's growth. However, it is important to remember that a high P/E ratio also carries risks. If future growth and profitability do not meet expectations, there is a risk of a stock price correction. Therefore, it is important to analyze SoFi's stock yourself and make your own assessment of whether the stock fits your investment strategy. The P/E ratio is just one of many factors to consider. The future results of SoFi are still uncertain, and it is important to take this uncertainty into account. Let's now, at the end of this video, summarize the main pros and cons of SoFi Technologies, so you have a clear picture of the opportunities and risks associated with this stock. On the positive side, we see that SoFi operates in the rapidly growing fintech sector, with a focus on young professionals and significant growth potential. SoFi offers an all-in-one platform for financial services, which distinguishes it from many other market players. SoFi is a technology-driven company, using advanced technology to deliver efficient and user-friendly financial services. The company has shown strong revenue growth in recent years, and operating income is also improving. Lastly, SoFi has created a strong brand experience among young professionals and has an experienced leader in CEO Anthony Noto. On the other hand, there are also some risks to consider. SoFi stock is relatively highly valued, with a high P/E ratio, which can lead to an increased risk of a price correction. SoFi operates in a competitive market, with both traditional banks and other fintech companies. SoFi is also still heavily dependent on loan provision, which carries risks in a weaker economy. SoFi is a relatively young company, so there is less certainty about the long-term strategy and its outcome. SoFi is also subject to financial regulation, which can increase costs and limit activities. Lastly, under Anthony Noto's leadership, there has been criticism of high costs and the dilution of the stock through acquisitions. In summary, SoFi is a promising company in a rapidly growing sector, with a strong platform and a focus on technology and growth. However, there are also risks, such as the high valuation, competition, dependence on loans, the young age of the company, financial regulation, high costs, and the risk of dilution. It is important to carefully consider both sides and do your own research.